Good morning, guys, and welcome to the Camp Financial Stock Market Update for December the 9th. So, obviously, market's good again. Yesterday, it's been good basically all week. I know I missed, so if you only watch my videos on YouTube, you would have missed. I went Facebook Live a couple of days this week, so I was traveling for business and I didn't have this laptop with me in order to do my videos on. So if you want to check those out, you can. So yeah, let's go ahead and jump into the market. Like I said, market's up again yesterday. It's been a pretty wild ride. Markets are at the point now that they're looking for new highs. So we're kind of in a spot now where you can't guess where the next kind of break is. It may just find its top. It may find a point and turn around. Like yesterday, at one point in time, the S&P 500 hit 2,250. It ticked just a little over, and then it came right back down to it. So maybe 2250 is going to be our next kind of threshold to break through, and then above that, who knows? Because obviously that's as high as we've been. So let's pull up the heat map for yesterday. Take a look at that. I saw some bright red in there. I want to take a look at healthcare's been tough. Express Scripts down 6.75% yesterday. CVS down 3%. But I've seen this whole week when most of the market's been bright green or green and moving up, healthcare's been basically flat or down. It's been a tough week for the healthcare stocks. Auto service stocks down a little bit yesterday. Industrial goods down. I want to go into our list of stocks. A lot of those hit new highs this week. Yesterday, specifically, I think 10 stocks were on the list yesterday that hit new highs at one point in time during the day yesterday. So those, on all those, we just moved the stop loss up with their current high price, and that way you're prepared if the stock turns around and goes against you. You've put a stop loss in place. You're going to protect the profits that you've made along the way. That's the key to really making money in the stock market, is being able to get out before things go terribly awry. You're never going to pick the exact market top. You're never going to pick the bottoms to get back in at, but if you pick, if you go through the top, let it come back down, realize that it's going to keep going down, that's when you get out. You protect your profits, and that's how you make long-term wealth. Same process on the bottom side. Stocks are going down. Once they've hit the bottom and they have stabilized and they start to turn, that's when you look to buy that stock to ride it on the way back up. And again, knowing that you may not make the top, it may go through the top and it may come back down, or it may go part way up and then turn against you, and it's just, you take more of a loss on that than you want. You're still may be a profitable trade, but from the high that it hit, it's time to get out. For example, this year, I know I used to talk about it specifically on here. So I'm going to pull up the stock Agnico Eagle. So we bought Agnico Eagle Mines back in February of this year, and we bought in at, let me see, actually I've got the exact prices right here. Bought in at $35.83 on February 11th. And if you go back and look at the chart, you'll see that basically for that whole time it just kind of bounced around till about halfway through March, and then it started taking off. It was right around $35 in mid-March, still probably under 36 on April 1st. Then by May 1st, it was up to $45. June 1st, it was up to $50. July 1st, up to $55. Pulled back to just over 50 at 51. We still held on there. And then in early August, it actually ran all the way up to a high of $60.10. Then at that point in time, like I said, and this is where you put your downside protection in. There, it started to turn against us. Dropped back below its 20 and 50-day moving averages, and dropped all the way down to $50 a share. I still wasn't concerned at 50. I felt like 50 was still a pretty good price. Then it rallied back, dropped down, rallied back again, and after that second rally, it came down hard right at the beginning of October, dropped through $50 a share, and so we sold out at $48.25. So, we lost out on $12 a share along the way. But in the grand scheme of things, that stock still made us a 30.4% return over 6 months. No, 8 months. Over 8 months, it made 30%. Then it did rally back again after we had sold out. It shot back up to $52 a share, and since then it's dropped all the way back down to $40 a share. So right now it's on its downward trend, and you stay out of it until they find that baseline again, and then they start to rally up. So that's it for this morning. If you guys have any questions, send me an email. Other than that, take care and have a great weekend.